Let's pick it up with number 7 then. This one comes from Aaron Howard. Hello. He says, I'm Aaron Howard. I'm a full-time college student at Goldie Beacom College, so I have a limit to my finances and how much I can invest. I've recently taken an interest in investing. I've listened to some David Gardner podcasts, read a few articles on Fool.com. I did research, read the article about which broker to use. I feel as if Ally is one of the best for my situation due to the no minimum and low fees per trade. Good job doing your homework there, Aaron. He says, I would like to invest in both short-term and long-term stocks. Long-term as in a Roth IRA, but I'm also very interested, Aaron writes, in short-term quick return stocks with little returns on each before I start investing into long-term stocks. The most recent article I read on Fool.com says to stay away from penny stocks. My issue, Aaron writes, is I want to learn the market and the ins and outs, do my own trading. I feel penny stocks will give me a decent feel for the market with my given financial status. I know this sounds like a bad idea for a college student, but I have been a 4.0 student my whole life, and I feel as if I have the drive and adaptability to learn the patterns and ideas needed to succeed. Any help you can give would be much appreciated, Aaron Howard.
Boy, penny stocks are, interesting territory. I think every beginner, most beginners will at least be intrigued by the idea of, trading penny stocks, trying to find patterns in the chart, whether it's a yakking camel or whatever it is.
But it almost doesn't matter because if the stock's at 37 cents a share, David, if it goes to $1, you've more than doubled your money, right? That is the mentality. I had that too when I was just starting out investing. Did you?
Yeah. The idea is that, if a stock is at 37 cents, it's easier for a 37-cent stock to go to $1 than it is for a $37 stock to go to $100. But in reality, that's not the case. What counts is the overall value of a company. And just because Amazon is at, $1,800 a share or so as we tape this, it doesn't mean it's any less likely to go to $3,600. What counts is the overall total value of the company. So
why don't we like penny stocks typically?
Typically, penny stocks are trading for pennies for a reason. Oftentimes, the companies behind the penny stocks, you have to remember, behind every stock is a company. With penny stocks, typically the companies aren't in that great of shape if they're even selling a product or generating revenue, oftentimes losing a lot of money. They don't have much of a track record. A lot of shady stuff can be happening with penny stocks.
And it isn't to say that it always will. There's certainly some fine microcap companies and some fine microcap investors. But I do agree with you, David, then when you're talking about a stock that, you could double if it just went up from 37 cents to 74 cents and it's very thinly traded, and it might be a promotional company that's hired somebody to market their stock for them, and then word gets out on the internet that this one could go from 37 cents to 74 cents. Markets can move like that, and sometimes people take advantage. Some bad actors are in there taking advantage of that.
Yeah, the pump and dump schemes that are out there. So really where people will front run their email list or their members, buy up a lot of this stock, then heavily promote it to the public, even taking out advertising to promote this stock, send it out to their email list.
And then selling their shares to the people who are buying.
Yeah, but inevitably that will crash and burn. So the track record with penny stocks are murky at best. I haven't found anyone who has a long-term track record of success when it comes to identifying patterns and any sort of meaningful success over a long run when it comes to penny stocks.
We do talk a lot about market cap on this show, and so somebody might be wondering, well, what's a penny stock and what's a micro cap and what are the differences? And I guess for me, I'd make up that micro caps are, I guess I'd say anything below $250 million of market cap, that or less. And when you get down in penny stockville, I almost think that's its own separate asset class, and I'd say like sub 50 million at that point. Often it's very thinly traded stocks. There aren't many shares, but beyond what is a penny stock or what is a micro cap? I think, David, for me, these are usually companies that aren't really impactful in the world at large. They're not really doing important things, are they, if their stock is all the way down there at 37 cents a share? And I think we've done much better as investors ourselves, as rule breakers, finding the real impact players in the world at large. And those are usually the stocks you can hold for 3+ years. Before we go on to rule breaker mailbag item number 8, I mean, Aaron is talking about this concept of short-term investing. Let's pretend it's not even about penny stocks. What do you think about, did you ever do that? Trade in, trade out, alongside maybe a longer-term approach to investing?
Yeah, I've definitely dabbled with that. I don't do it as much because, again, it's hard to generate any sort of like meaningful consistency with that type of strategy. I think we're as humans, we're susceptible to being overconfident. We think we're better than we really are.
Do you think that's true of some of the Game of Thrones characters?
Probably so. Yeah.
I think some of them definitely think Cersei, definitely think that they're better than they really are.
Yeah, it might come back to bite them in the next 4 episodes. But with short-term trading, I mean, any time horizon that's less than 1 year, I think you're really flipping a coin. So sometimes you'll get lucky. You will be right on the money. The stock will go up like you anticipated. But for the most part, I've found that I do far better the longer I extend my time horizon. Even if you're starting with smaller amounts as a student, like Aaron is, I think you're going to be far better off long term if you don't dabble in the trading and focus more on what can you do to extend your time horizon, find a great business that you think will be more relevant 10, 20 years from now. Buy as many of those types of companies as you can and just hold voraciously. I think you'll be a lot better off.
So we want to close by praising Aaron for even getting started investing, for his curiosity, for his 4-0, and for wanting to really lean into this subject. And I think it's fine to act on an initial urge if you like to be a little shorter term. I mean, I wouldn't put a lot of money in it, but some people enjoy their fun money at Las Vegas. Well, you could do it short-term trading stocks if you wanted and maybe learn some about the market dynamics. But I think most of us, the earlier the day comes where we realize I'm in it for life as a long-term player, that's when our real returns start coming. So I would encourage you, Aaron, to think about that side of the equation far more than the short term.